So without taking much of your time, normally the call is going to be 15 minutes, and any question about Forex or business itself, I'll be able to give you my candy response about it. So you have 15 minutes of my undistracted
undivided attention.
Yeah.
Yeah.
So any question you have.
Okay, thanks a lot. Yeah. So I've been doing Forex now for about a year plus or something. Yeah, and I've learned a lot of stuff. Like my head is aching. Like this one tells me the strategy, and it's really like my head is exploded with strategies and stuff. Yeah. So, but what really kills me now is the psychological aspect of Forex. Like, yeah, I can analyze the chart, draw square resistance, map my zones and all the things, use pips and all this stuff. But what kills me now is psychology. My main issue is greed, like when to take profits, when to get out of the trade and stuff, and my mindset during the trade and other stuff. So that's what really kills me now. Like I really need to help me to help know the psychological part of Forex. Like that's what is really like.
Okay.
Right now.
Yeah, I understand your question, because we've all been there. We've all been in that situation where you actually place a trade and you ask a lot of questions about that particular trade. If this Forex is even for you, or why did the trade go against you, or maybe immediately after you place that trade, it immediately maybe hit your stop loss and then went on your original direction. So those are just like psychological tortures that everybody will normally go through. It's a curve that any beginner Forex will normally follow that curve. But as a beginner, let me not classify you under as a beginner, because even as advanced or intermediate trader, everybody will go through that stage. Even I myself today, I still go through that stage. But what gives me that edge or that advantage is because I've been able to have a defense mechanism, that back me up. Anytime I try to maybe derail from my plan, I have a defense mechanism already. So the first thing you have to do is to have a plan. That's why they say have a plan and trade your plan. You know, something like that. Yeah, they say have a plan and trade your plan. It's very easy to say it. It's very easy to say it. It's very easy to read it on Google or to see it on YouTube. But how do you actually implement it? You see, for something like Forex, there are more than 80 strategies that you can use. I personally, I know more than 30 strategies that you can use to trade Forex. But now, which of those strategies fit you as a person? Which of those strategies fits your personality? You understand? So you have to choose a strategy that fits your personality. Somebody like me, I'm a business person. I won't have the time to sit on my computer every day. Yes, I won't have the time to sit on my computer every day and I'm looking at the chart or I'm doing although I have strategies that I can actually Skype sometime. I enter into trade, maybe 5 minutes, I'm already out, 10 minutes, I'm already out. But that I only do that when I have the leisure to Skype. That means I've fitted the trading into my schedule, into my personality. So the first thing you have to do is to look for the strategy that will fit your personality as a trader. No two strategies might work for two people. My strategy or my way of trading might not be the same like your own strategy. You understand?
Yes.
Yes. So the first thing is for you to have a strategy that fits your personality as a person. You know, trading sometimes has to do with your personality. If you're somebody who is disciplined in real life, as a trader, you're going to be disciplined. If you're somebody who is organized in real life, as a trader, you're going to be very organized. Yes, it's just like that. So for you to be able to start battling that psychological aspect of trading, first thing first, you need to look for a trading style that fits your personality. You understand? Then another thing that I also advise you is to try to cut the noise. Try to cut the noise out there. Cutting the noise is like you having a filter. You filter what you listen to, you filter what you watch, you filter the strategies you copy from people. Remember, even if you watch some of my video, I told a story when I just started. I used to try everything I watch on YouTube. I used to try everything I read on Google. And I blew nearly all my accounts, even including my house rent, because I was copying people. Another person's style might not be my own style.
Work for you. Yeah.
Yes, another person's style might not be my own style. So coming back to our question, how can you fight the psychological battle in Forex? Just like I said, the first thing first is for you to look for a trading style that fits your personality. Number two is for you to be able to
filter the noise.
Yeah, to filter the noise, not cut the noise. The noise will always be there. But try to filter the noise. Filtering the noise will involve you like knowing the kind of people you listen to, knowing the kind of people you follow their advice, because they say some people will say, do what I say, not what I do. So those kind of people are not the people you should be following. If I sit here and I'm talking about how to trade in news, I should be able to show you example how I trade in news and make money.
Yeah, live.
In today's life, anybody can just come on YouTube and just do videos and just follow another YouTube video and then make his own video. But is that person actually practicing it in real life? So filtering the noise will enable you to be able to follow who does exactly what you want to do in your trading or in your business. So that's just the second and the most important thing. Then the third and the most important point which I have to figure out is at least giving yourself time to mature. You understand? Yeah, so just giving yourself time to mature, because trading sometimes is just like being a doctor. It's just like being a doctor. For you to actually get into that zone, that sometimes when I open my computer, just see maybe Great Britain pound USD or gold or silver, intuitive, that means my intuition. Sometimes I just see the chart and I know that okay, it's gonna go up from this point. I just see the chart and I know that okay, it's gonna go down from this point. That is, I'm in the same, that synchronicity. My mind has already been able to sync with the market. That means I'm trading. They say trading in the zone. They say that means I'm able to trade in the zone. I'm already in synchronicity with the market. The market doesn't care who you are, whether you're the president, or prime minister,
care about your feelings, your past.
Whether you're from Cameroon, South Africa, UK. No, the market doesn't care who you are. So the best thing you can do to succeed in the market is to try to be in synchronicity with the market. That's why they say trade with the flow, trade with the trend. You can't try to create what is not there. You just try to follow what you take what the market presents to you and you try to make money out of it. The system has already been there and will be there even 60 years from today. So you try to be able to give yourself to mature, and you also try to have a system that fits your personality. So I hope I've answered your question on that part.
Yeah. Thanks a lot.
Anytime, bro. Anytime.
Yeah. The question I always wanted to ask you answered it always in the YouTube, like you risk to reward. That risk to reward video, bro.
Yeah. Yeah, risk to reward. Just having a recap about risk to reward. That's why sometimes when I trade, I don't care whether the trade is going to go on my behalf or actually if the trade is going to go against me. Because I know even if I place this one and I lose, I place the other one and I place the other one and it's the winner, or I place the other one, I know that okay, the one that I actually win is gonna bulldoze. It's gonna bulldoze all those other small winners that I've been having. Because my risk to reward, the typical risk to reward that I trade with, if I take any trade, if the risk to reward is at least 1:3, that means the risk to reward must be at least 1:3. Yes. And above. That sometimes I used to take trades on maybe gold. With gold is very easy. Gold has a high P value. You know, when with P value, gold has a high P value and the liquidity for gold is very high. Gold and pound USD, those are like my two favorite pairs. So for those pairs, sometimes I used to have a risk to reward of at least of about 1:7. 1:7. That is my risk in that trade. If I place that trade, if I'm risking $10, it means if the trade goes my way, I'll be coming out with at least $70. If I'm risking, sometimes I used to risk even $1,000. That means I can afford. That's what they say in trading. Only risk what you can afford to lose. For me, I can afford. I've made millions, I've lost millions. So sometimes I can afford to lose 1,000. I just put it. Once you already have that paradigm in your mind, it reduces you from that stress. It reduces you from that trauma. If you can afford to lose just $1, place your $1 trade. With time, when you gain that maturity and you have a bigger account, what will just matter will be account size. The same energy that you are using to trade on a $10,000 account will be the same energy you'll be using to trade on a $1 or a $1,000 or $500 account. So the most important thing when you just start is having the skills. It's not about, is the consistent number of pips you can make. Always count on your pip value. If you're just starting, count by the consistent number of pips you can make per day. Because if I can make 5 pips consistently every day, you know, I can become a billionaire even from just making 5 pips consistently every day. Because if I'm making 5 pips consistently every day, and I'm using a $1,000 account with a micro lot, maybe I'll be making $5 every day.
$5, yeah.
Yes, but with a $10,000 account, when I start trading with a standard lot, I'll be using the same energy, the same strategy, the same psychology, everything. The only thing that will change at that point in time will be my lot size. And with my lot size change, maybe if I was making $5, I'll be making $5,000 or $500.
5,000, 500,000.
Yes. So when you just start trading, stick with, count your profit or your progress. Count your progress in terms of the number of pips you can consistently make. You understand? Not on the dollar amount you can make. Somebody can make $10,000 today, $20,000 today, but how consistent can you make that money tomorrow? How consistent can you live to trade another day? So when you start, count your progress in terms of pips. Then when time comes, when you've given yourself time to mature, you can then start counting your profit in terms of the dollar amount.
Dollar amount.
Yeah.
Oh, thanks a lot. I really appreciate it.
You're welcome. Anytime. So risk to reward is something that is very, very, very important. If I had some time, let me just see if I can share my screen here. If I can just go here on whiteboard, let me see. Okay, are you seeing my whiteboard?
Yeah, I can see it.
Okay, let me just see. Okay, let me just undo. Let me see if I can just, I thought I had some of those examples. Okay, let's just see, we have our support line here, right? You know, the support line is always below, and the resistance, it's always above. I always like to use the example of the floor and the ceiling. The floor is always, the floor is the one supporting me when I'm sitting here, and the ceiling is the one holding me up. So I have my support and my resistance. Let me just put here my resistance, and here I have my support. Okay, if I have this, let me just assume, though the market will not just be like this straight, but let's just assume we have the market going from year to year, year and year, right? We've seen that. Okay, we've had 2 touches here, we have 2 touches here, another touch here, and another touch here. Taking my trade here, obviously, just taking this trade here, what also key many traders as a beginner is something like, is what they call stop hunting. So many people will come here, they will take their trade around this point, but they will treat this resistance line as, they will treat this resistance area as a line. But you need to treat it as a zone. You need to treat this line, the whole of this area, as a zone. You need to understand that as brokers, they make their money. They already know where you're going to be able to place your stop loss. They already know where you place your take profit. So what they do is they know very well that this line, everybody can see this from technical analysis. Everybody can see that there was already a touch here. There was already a touch here. There was another one here, and here. You see, everybody already knows. So coming here, they know that, okay, you obviously buy at this point, at this particular place. So if you come here, another thing that will make you to always lose your money in Forex, and you ask if Forex is even for you, if you use 2 tight losses around this particular point in time. So for you to be able to use a risk to reward, that makes sense, and still give your trade a room, and still give your trade a room to move. You have to give your trade like room to breathe. All right, you need to give your trade a room to breathe. So if you are taking a trade here, let's just assume here. Let's just assume here you take your trade, and you assuming you put your stop loss somewhere here, and you put your take profit somewhere around here. Taking your trade from year to year, see the gap from year to year. Let's just assume you're risking 5 pips, right? But from this point to this point, it's almost a distance of about 6 times this one. So this is a risk to reward of about 1:6.
1:6.
So you see that here you have the luxury of expanding, of taking your stop loss a little bit up. You can take your stop loss a little bit up. This will still give the market the room to move. So even if this market comes, it crosses this area, goes here, come here, go here, at least your trade will still be on, and at the end it will still go on. It will still go on your way. You see, because due to this analysis, you've given your trade, you've given yourself or your trade a room to move, and your risk to reward is still at least 1:3. Putting your stop loss here and your take profit here, your risk to reward is still at least 1:3. So what you have to do is, when you are trading support and resistance, to combine it with risk and reward, you have to trade support and treat support and resistance like a zone, not like a line. You see, like a zone. Not that's a big mistake people make, because if I'm trading that area, what I'll do is I'll just have it in my mind that my support or my resistance is the whole of this area. Is the whole of this area. You see. Is the whole of this, and if I come down again, I'll still have it in my mind that my support is the whole of this area. So even if the market comes down here and is circulating inside here and going up and down, I'll still know the market
is still your support.
Yes, the market is still my support, because people make that mistake. They just see the market come, it just pierce a little bit here, and they just jump into conclusion and say, okay, the market has already broken my support, or it has already broken my resistance. But you need to know that it is a zone. It is a zone, and brokers already know that you just coming here and placing your stop loss here, they're going to be able to just push the market a little bit up around here, trigger you, then the trade will automatically go on your way. You see. So the key point you have to take for something like that is to be able to know that support and resistance is a zone, not a line. I used to have that same mistake where I just go like, okay, I trade support and resistance like a small line. I just watch, immediately it break that small place. I just buy, put my stop loss very tight. Then the market will just immediately trigger my stop loss. I lose that trade. Then originally the market will just go on the intended direction. So that's a mistake.
Direction they wanted to do.
Yes, that's a mistake which you should also try to avoid as much as possible.
Wow.
Yeah.
Thanks a lot. Really appreciate.
Yeah, so
my mind is blown.
yeah, one you see, if we sit here and we talk about Forex the whole day, yeah, it will still make sense. You have a lot of points you pick from me, but if you can pick just one point from this video today, that okay, always give yourself to be able to mature, give yourself to be able to reach that particular level. They used to say you don't have to compare your chapter 1 to another person's essence chapter 3. You see, so that is another thing that will just help to just prevent you from that psychological trauma. It's giving yourself.
That's one thing that was killing me here.
Yes.
Trying to compare with other people who have been in the industry before me, like this person is making $1,000.
Simple. When you see even our fingers, they are not the same. Yeah. So, and they will never be the same. It's the same thing in Forex. Everybody has its own level. So long as you have a level that you are comfortable with. I'm comfortable making what I make every day. That is why I can be able to share my ideas. So it's the same thing for you when you are just starting. Give yourself room to be able to arrive at that particular point. You need to know that Forex trading is a get-rich-sure scheme and not a get-rich-quick scheme. You know the difference? Yeah, it's a get-rich-sure scheme and not a get-rich-quick scheme. People advertise Forex as maybe it's a get-rich-quick scheme, but no, that is a big lie. They're just selling you a dream. Forex trading, it's not network marketing where they tell you to bring one person, bring two. No.
Yeah,
so they tell you Forex trading is a get-rich scheme, but you need to understand it's a get-rich-sure scheme. For sure, you get rich, but you not get rich as quick as what they want you to. They're as quick as the dream they're advertising to you. Yeah.
Yeah. Mm-hmm. Oh, thanks a lot. I really appreciate it, bro.
You're welcome. You're welcome. So I think these were the main point which you had to ask you that.